Welcome back to The Exchange. A long-time Tesla bull, Ron Barron, making a bold call today on Squawk Box about the future of the automaker, sounding more optimistic even than before.
I am so excited. The next 10 years, I think that Tesla is going to be the largest company in the world. And in the 10 years after that, I think it'll be challenged by SpaceX, which could become the largest company in the world.
Okay, well, he's not the only one bullish. Wall Street has shown the company a lot of love recently after the passage of the Inflation Reduction Act. But is the positive tone misplaced? With us, Toni Sacconaghi, Managing Director at Bernstein. Toni, people lose a lot of money betting against Tesla, but what does the company have to do to be as big in the next 10 years as Ron Barron expects?
Well, good afternoon, John, and thanks for having me on the show. Look, Tesla's executing extremely well, and it has dominant share of the electric vehicle marketplace today. It has about 20% of all EVs sold globally are Tesla branded. So, arguably, if they were able to hold share and have 20% share of the EV market and all cars were EVs, 90 million cars a year, Tesla would be selling 18 million cars a year instead of about 1.5 million today. So, the question is, can Tesla maintain its share over time? And, I think that is a question. There's no automaker today who has more than about 9 or 10% share, and that would be Toyota and Volkswagen. And the market is becoming more competitive than it has been. You have all the traditional OEMs who have jumped into this marketplace, but you have many new EV OEMs, particularly in China, who have joined in. So it may be a tall order to believe that Tesla can continue to maintain share in the face of more and more EVs coming to the marketplace.
But here's my worry, though, is that that saying that is a little like saying back 20 years ago, here's what percentage of the PC market Apple would have to grow into to justify it being worth anything near, say, $500 billion. We know it's beyond that, and not because it gained a ton of share in the PC market, because it leveraged its loyalty, its brand, its platform, and vertical integration in a way that nobody else in that business could and did. Might Tesla do something similar? Or do we risk, in the bear case, looking at it too much like a traditional car company?
I think that's a great question, and there are several potential opportunities that Tesla can create for itself. The whole world of autonomous driving, which is an offering that Tesla currently sells today for $15,000 per car and has very little take-up, is a significant market opportunity. Tesla's also talked about a humanoid, a robot in essence, that could displace manufacturers or manual labor in the workforce going forward, and that this could be a significant opportunity. They're also delving into areas like insurance as well. So there is significant option value from Tesla. I think in Tesla's case, perhaps, similarly to Apple, is just betting on innovation. Apple was only a Mac or PC company 20 years ago, and then everything changed with the introduction of the iPod and then ultimately the iPhone, and it has evolved into a totally different company going forward. And the question is, does one bet on Tesla's innovation going forward? And I think there is some of that option value that is priced into the stock, given that Tesla today basically trades at a higher valuation than all the other auto companies in the world combined.
Right. Well, let's talk a little bit about Apple specifically. They got an event coming up on September 7th where we expect to see the next generation iPhone, and see probably a bit more than that. The stock has been outperforming the market. It's near its highs, arguably justifiably, because the luxury consumer has been doing pretty well, and they've got some innovation that has allowed them to maintain share and profits. Do you see risks here?
Well, I think the real question for Apple, especially around this time of year, is how strong will the next iPhone cycle be? So iPhone is still 50% of Apple's revenues and about 50% of its profits. And we've had 2 very strong years for iPhone, on the back of strength in the consumer, and on the back, quite frankly, of 2 years prior to that, where iPhone sales were quite weak. And so that's really the operative question is, can Apple have a 3rd year of strong iPhone sales?
How much of that is up to Apple, and how much of that is up to carriers, and how much they're going to subsidize?
I think a lot of it is ultimately driven by Apple's ability to get people to upgrade. Now, carriers can influence that to some degree with promotion, certainly. But, it's also up to Apple to deliver something that's compelling, that people feel a need to go out there and actually upgrade their phone. So I think it's principally Apple. And, ultimately, the iPhone 14 is expected to be much more evolutionary than revolutionary. And so the question will be, are there enough upgraders after 2 pretty strong years for Apple to continue to have robust sales for the iPhone 14? And yes, carriers at the margin can help with incremental promotions. But at the end of the day, it's really about, is the phone compelling enough to get someone who's maybe only had a phone for 2 or 3 years to upgrade again? And that's the operative question.
And for the past, 7 or 8 years at least, most of the people I've heard have said, oh, this is evolutionary, not revolutionary. And half the time, Apple actually has a pretty good cycle. So we'll see. Toni Sacconaghi, thank you.
Thanks, John.
Now, still ahead, Amazon Prime becoming the exclusive home to Thursday Night Football, with its first game kicking off tonight. How high are the stakes for the league, and what's at stake for Amazon? We will debate. Plus, can the stocks that surged the most in 2020 make a post-pandemic pivot? We will look at some of the so-called one-trick ponies struggling to get back on track. The Exchange is back after this.